Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, June the 5th, 2013. We're looking at many different markets today. Australia to start off with, and then we'll be looking at the U.S. and as well as Europe. So what I want to show you today and remind you that basically globally what you're seeing is the end of QE, and so that's the trade that's going on right now. Everyone's selling off ahead of that. Right now looking at Australia's market, you can see it's the most advanced comparative to all the other charts that we track for you at PerfectStockAlert.com. So in this particular chart, you can find a lot of information that can be pertinent to your trades in the U.S. or Europe, so forth and so on. So it's really, really important what's learned from here. Right now, I want to point out a couple of things. We've been talking about this as being a bearish scenario and a bearish opportunity for a while, and you've had plenty of money made on the downside. And I'm sure that because we're hearing about it in the U.S. and I'm seeing a lot of people talk about where to cover their short positions or where to go long for a bounce, etc., etc. Stop thinking like you're in a bull market. You're not. And you're going to see that develop more and more, and I'll show you in a little bit how you can see that's developing. But the main thing to talk to you about is that there's a different way of trading in a bear market than there is in a bull market, and that is you do not attempt to counter trend trade, and you do not attempt to play the bounces to the upside, because most of them are going to be really small little details like this if you get that much. And so it's important that you take note of that and realize that this thing is going to move faster and faster and faster against you. Whenever you're looking at this chart, a lot of people are looking at oscillators. You could do the ultimate oscillator and say, okay, well, we're oversold here, so that must be a good reason to go buy. That's actually not accurate. It's a good reason to recognize that momentum to the downside is very strong. And in fact, there's other signals here that would have told you are going to take out this low point right here. You know that because the low here is lower than the low here. So the idea that I'm going to buy here and trade a bounce upside, you're still moving lower. You've already been signaled here on this chart that it's going to take this low out. You had other reasons to know the same thing. But whenever I'm looking at this chart, there's another way to do this. And someone asked me a couple days ago how I know that the market's going to keep moving lower here on Australia's market. They thought it was a good place for a buy or at least a cover of a short, so of that nature. Here's how I do it. Let's just call this a channel right here. This is the high point, about 5 something, and we come down here and we'll call it this right here. That's okay. That's the bottom of the channel, and it goes back 6 months or so. You could actually track this channel out. Well, what you do whenever you break a channel from a technical perspective, you mathematically calculate from this point here to this point here. It works out to about, I don't know, 350 points. And then you subtract that number, 350 points, to the downside from the breakout. So from here, we can subtract 350 points from this, and it puts us at about 550, somewhere in that area, 6. If you want to be conservative. You still have a lot more downside potential here. So if you're just looking at these little oversold points here, saying, oh, I think it's time to get out and go long. I got a hammer candlestick formation right here. You're going to miss it. The actual trade is going here. You're having a structural failure. You're breaking down. That's what's most important. You're closing below the 50-period moving average. The best opportunities to go short in a downtrend in a bear market environment is to get short above the 50-period moving average or at the 50-period moving average. So if you want to advance your stop, that's one thing. But if you're going to say, I'm just going to cover because I think the market's gone far enough, you better think again. Quick glance here at the Dow Jones Industrial Average. We want to point out a few basic key points. Number one, you are still trading above the 50-period moving average. If globally you're all seeing this sell-off happen, why would you be a buyer of this environment? That doesn't make any sense. Number two, would you be a buyer in a situation that has an ultimate oscillator still above the 30 line? No, there's nothing there to do anything with. Number three, look at the candlestick formation. Is there any sign here of any buy pressure? No. In fact, if you look at Friday's activity, you can see a 200-point move to the downside, and today it's a 216-point move to the downside. That basically tells you that bears are getting stronger and bulls are getting weaker. Of course, I would not be a buyer in this environment. I'm looking for us to sell off continuing, to take out these lows here and here, just like you've seen on the Australia market chart. And again, point out low point here, lower low here. It's telling you the same thing. It's going to take out these levels. Yes, you could have a bounce along the way, but I wouldn't expect much out of that bounce. Be looking for the move that's coming that's bigger. If you've got, like for me, I'm using options, so I make sure I have enough time on my options. Like right now, I have like a month and a half basically, and that gives me plenty of time to sit through a day or two to the upside. It's not a big deal for me. But if you've got real short time frame, well, it's different for you. You're trading a more day trading strategy or something like that. That's fine. You make your decisions that way. But the overall chart is telling you look for this thing to break down. And if you start taking out these lows, now you have massive lower lows. You're going to have lower highs. You're going to turn into resistance at the 50 and so forth and so on. We'll get to that point when it's there. But right now, you should be very bearish this market. Quick look at the Russell 2000 Small Cap Index. I'm going to go ahead and skip the NASDAQ because I covered that yesterday. You can watch that video if you missed it. And basically, on this one, we have a continuation signal to the downside after a break of the little wedge formation here to the downside. All these signs are negative. You have a lower series of highs from this point to this point here, a lower series of lows from this point to this point here, and not good for bulls in any way, shape, or form. Like I said, continuation signal to the downside. Look for more selling. Look to get below this 50-period moving average, and that's where you're going to start to find some increased selling. Also note, nowhere near an oversold condition, if you want to call one that. There's nothing here that would indicate any reason to be buying this market. You should be a complete seller here. Looking now at the S&P 500 Large Cap Index, or the SPX, you can see in this particular chart, there's a lot of interesting details here. You do not have the oversold condition, so again, I wouldn't even be considering trying to buy off this 50-period moving average. I know you find support there in a bull market, but you are ending that bull market and going to a bear market. Ergo, this is not going to be support. You know that just because there's no hammer candlestick formation here, and so there's no support there. That's how support is formed. You hit some kind of a support, you get some buy pressure coming in off the 50-period movement. That makes sense. But when you come down here and you don't have that, then you're going to see it come down here close below that point, and that will be more telling and also more troubling, because we'll talk about that later. But the main thing here on this chart, lots of sell pressure here, lots of sell signals. We had one here, one here, one here. That's very important, and I expect you'll start to find them below the 50-period as you're seeing them on other charts as well. Once we get broken down there, right now I wouldn't chase it. If you're already short, great. If you're not, look for another entry opportunity. Nice little going to give you a good stop loss limits. That type of scenario. In this one right now, there's a couple things that I like about this. We have a very controlled sell-off here. This is really not a dramatic move. It's very low volume, basically, and all of this is just going to convince people that this is just a pullback, just a little tiny thing, nothing to worry about. But there's a few things that you need to know. Number one will be when that changes, and you'll notice that because it will be massive sell volumes up way higher than you're seeing right now. Right now we're just looking at average daily volume basically for the past, I don't know, week where we've had this massive sell-off. Look for that to change. You also notice the momentum as indicated by the MACD histogram getting more substantial to the downside here. This is basically what we're talking about by reading the candlestick formations as well. But basically this tells there's no end here. There's no reason to be looking for a buy, or there's no reason to be covering shorts or anything like that. You're obviously moving to the downside and increasing that momentum, the speed lower. And I would ride the heck out of that as much as I could possibly get out of that. One of the tools you can use for the end of something, whenever you start to see it peak out, whenever you get a move to the upside, and then you see the histogram bars getting higher and higher. When that starts to fail, then if you want to advance your stop, I would understand that. But in this situation we have right now, the ride is just getting started. There's no reason to be looking for an exit on the sell side or an entry point on the long side. Now, if you understand what I'm talking about when I look at the AORD chart, the Australian markets, you know that I'm talking about the global markets are going to be doing the exact same thing you see there. So that means you're going to be taking out this low. This low point here hasn't got a hammer candlestick formation. Very many different ways to tell this is not going to actually hold when it's tested. But that's what we're doing. We're just moving down this way. We're going to take out that level. That means you're going to take out this level, right? If that's true, then you should see some kind of confirmation by looking at the VIX, which runs the inverse of the S&P 500. So let's go look at the VIX right quick. Okay, here we are looking at the VIX, the volatility index, which represents the option activity of hedge fund managers and things like that, smart money. You can see that they are adding to their options position. That's why you're seeing the VIX rise. And that's just because they're afraid of this current market. And that's why they're hedging their positions. In this particular environment, you can see that the VIX is now trading up to the levels of the previous high. That means price activity on the S&P should be trading down at the previous lows, and that's what's coming. So again, I look at this candlestick formation and see that we have a continuation signals at the upside, and we're not overbought in any way, shape, or form here. We have broken above the 50 line here. That's a very good sign here for on the ultimate oscillator for in the bull market scenario. That's something we talked about before, but again, it just points out that things have changed here. You were finding resistance at that point where you were in a bearish kind of environment in the VIX and a bullish environment in the S&P, and now that's changed. You're starting to switch into a bullish trend on the VIX and a bearish trend on the S&P. You haven't seen it just yet, but it's coming. And very clear here anyway. You have a nice consolidation period here. You know, the tightening up of the Bollinger Band lines, then a breakout through that, start closing above the Bollinger Band, pressing them higher. You see the Bollinger Band expanding in this direction, that direction. It's very clear a bullish environment in the VIX, ergo it should be very clear that you have a bearish environment in the S&P. Looking now at the EMW, the Wilshire 4500, pretty clear. You got massive move going on to the downside. Candlesticks are getting larger on the downside moves here. We're now sitting at the 50-period moving average, but note the candlestick formation. Nothing bullish about this in any way, shape, or form. Look for this to continue to move to the downside. Great trade here. Also note nowhere near oversold or anything of that nature. If we scroll on down, we look at the histogram on the MACD, you can see it's very clear. We're still moving substantially to the downside here, bigger and bigger and bigger and bigger and bigger. Okay, I love that. Quick glance here at French market, French CAC 40 index. You can note a couple things. We got some nice confirmation today on the sell side. Sell signal 1, sell signal 2, and those are all above the 50-period moving average. To be going below that, and then that's just really great situation to be trading on the downside here. Look to be, again, same thing, and look to take this level out. Looking now at the MIB, if you want to look at the Milan index, you can see the same basic signals. You got sell signal, and confirmation today. Nothing here that I would be looking to buy. And of course, you're still trading above the 50-period moving average, this red line right here, which is a great opportunity to get short. And then again, I would be looking to take this level out. Looking now at the German DAX composite, same basic overall story. Sell signals are forming, and again, it's very important you understand. If a sell signal forms, trust your chart. It's telling you something. It's trying to tell you, do not buy here. Sell here, and that's it. As long as you can trust your chart, you'll be fine. Someone asked me recently how I deal with fear in the markets, and it's just that I've learned to trust my charts, and that's about it. Looking lastly at the London Financial Times Index, or the FTSE, you can see very clear tear down of this uptrend that we had going on. Massive move here, lower series of highs, lower series of lows. Pretend like you got a little support at the middle Bollinger Band line, that breaks. Pretend like you got a little support here at this previous one here, that breaks. There's no support at the 50-period moving average. I keep warning you guys, there will not be support at the 50-period. You know that because you've seen before how it didn't have it, and it's not going to have it again. You're going to be taking out this level here, same thing that you're seeing everywhere else is developing everywhere else. For those of you who do not know, I have advanced the stops on a couple of the charts I talked about last, I think it was Friday when I did the 19 major markets we tracked via purplecycler.com. I told you there was a few charts that you could sell because they had the signals on them, but they weren't my favorites. They were just easier charts to trade. So I've advanced the stops on about, I think it was 3 or 4 of them. That's important to know in case you're wondering. And then if you're looking for those particular charts, you can always go to the market charts here. It's my personal charts, short-term and long-term, so you can see what I'm looking at and see my stop-loss limits as well as my sell signals that show up on the charts and so forth and so on. Okay. Also, there's some trading school here. It's got a lot of different educational material there to teach you guys how to trade, how to find your entry points, how to find your stop-loss limits, as well as where to find your targets and things of that nature. And that's all very valuable information in this environment. Okay. God bless. Take care. 100% free service. Refer a friend. See you tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.